Thank you very much, Vikram. Welcome everyone to the Q3 earnings call of NMDC. I'd like to thank the management team of NMDC for providing us the opportunity to host for this call. We have with us Mr. Sumit Dev, Chairman, and Mr. Amitabh Mukherjee, Director of Finance, to represent the management. So without much ado, I will hand over the call to Mr. Dev for his opening remarks, and then we can continue with the Q&A session. Over to you, sir.
Thank you, Vishal, and glad to join in this call. We have had a good Q3 as the results, as the numbers are showing, and we believe that things are moving positively. Q3, if you look at Q1, we had lost substantial volumes, but then we made these up in Q2 and Q3, and things look better also in Q4. January, we almost logged 15, 16% or around 17% of growth. And we have made up most of our whatever have been the losses in terms of production. If you look at our 9-month results, we have made most of them up, and we are back at same levels at CPLY last year in spite of the COVID pandemic. And prices also look good. I think going forward things should be much better now. Thank you. Yes, Vishal.
Yeah, thank you, sir. So, can you please open the floor for the Q&A?
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone now. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question and congratulations for a very good set of numbers. I have 2 questions. The first one is on the recent price cut that we have taken of almost 600 rupees on fines and lumps. Just intrigued that what prompted such a steep price cut, because if you look at the historic data, we were always at premium to Orissa-based miners, but now we are in fact running at discount to the Orissa-based merchant miners. So just curious to know what prompted this kind of decline, and whether the intent is to remain at discount to Orissa-based miners or something.
First of all, we are not exactly at a discount to Orissa miners. If you look at this scenario, iron ore primarily goes into sponge iron, pellets, and then subsequently into steel. So the prices of sponge and pellets have corrected substantially in the secondary market, and even if you look at the long product segment of the market, there has been a steep fall in the market. In the markets, Orissa miners have corrected their prices. If you look at the prices which have been obtained in the auctions of Steel Authority or OMC, all of them have corrected prices. So looking at all that, this was something which was the market. Looking at the market, so we have made this correction. So in any case, I do not believe that we are at a discount to Orissa. We are definitely above Orissa prices. So that's there already.
A follow-up to this question: do you see prices having settled at a reasonable level, or do you anticipate further price cuts in the near future?
Yes, see, what has happened is that definitely steel prices had in the last couple of months have gone up substantially, and there's not, obviously because of international prices of iron ore and steel. Obviously, they also had reflected on the domestic prices. But then I do believe that prices have now stabilized, and there would not be any much requirement of any further correction. We should be able to hold these price lines.
Wonderful, sir. That helps. The second question is essentially on one of the note to the accounts in which you have mentioned the ongoing discussions with respect to Doni Malai. There you have, in the last paragraph, you have mentioned that there was some sort of discussion or some sort of agreement that was reached with the relevant authority in Karnataka. So can you let us know what kind of agreement was reached? Was the agreement on a particular royalty, and if this royalty is extended, if there is some enhanced royalty, whether it will be payable for Chhattisgarh mines also?
So this question has been coming up quite often. In terms of payment of an additional royalty, so this was something which was there earlier also and continues to be there. But then there are other issues which we needed to discuss, which had cropped up with the government, state government, primarily on forest. The forest department had raised some issues. So that we have discussed with the state government. In fact, they had given us clearance to start the mine. Then there were some issues which were further raised. We discussed with them, and most of the issues have now been sorted out, and we think we will be able to start very quickly, very soon, in fact.
Sir, the only problem is that this issue has been flowing back and forth. We have been waiting for Doni Malai resumption despite many a lot of things have been done, and you have also been at the forefront in the management team. But so far we have not seen it getting resumed, and now this new forest department angle has cropped up. So is there something else that you anticipate? Because every time something new comes up, essentially, in this regard.
No, we have sorted out all the issues, and we hope to resume very quickly now.
With the additional royalty of 22.5%.
So that was never in. That was always there. Only there was some other issues which had come up, but now all the issues have been settled, and we hope to start very quickly.
Okay, sir. Thank you. Wonderful, and all the best.
Thank you.
Thank you, sir. We have next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. Dhanyawad, sir, for the opportunity. Sir, firstly, sir, what steps are we taking, sir, to ramp up our production from our existing mines, sir? What kind of capex are we putting up on modernization? And the technology which we have in our mines, sir, are they comparable with other miners globally, the world of Rio Tintos and others?
So it's like this that as far as production goes, we intend to do our targets for this year was almost 35 million tons, and going forward for FY22 we have made plans for almost touching 40 million tons. That is what internally we have finalized. As far as Doni Malai goes, Doni Malai sector along with Kumaraswamy is 14 million tons. So the balance will come from the Baladila sector. Now, Baladila sector, we intend to ramp up our production, and to that extent, we are putting in additional capex and equipments, infrastructure with regard to screening plants, crushing plants, HEM equipments, and we are also in a big way going ahead with a digitalization drive in the company, where we are automating our systems. We are introducing fleet management system, which we shall be, in fact, putting in place in this financial year, hopefully in this financial year. And then there are other technological or important mechanization processes which we are implementing, and hopefully we should be at par with the global mining giants which are already there.
So, sir, the MDO concept is being implemented for. If we can go for that mine development operator, we are looking in that concept, and how are we going to utilize the cash generated?
NMDC has never really gone into an MDO because we believe that we have the best of solutions for, as far as mining goes, we have been in this business for quite some time now, almost 60 years. So we know what we want to do, and that is how. We have done all our mining ourselves. So we don't intend to introduce MDO at this stage, at least currently in our mind. So If you look at NCL, probably there we will take a call as and when it comes. But right now, we don't intend to introduce an MD over here.
And on the utilization of cash, sir, what is the incremental cash and since we have gone with a buyback earlier, so what kind of dividend payout can be looked with the improved enhanced cash flow which we have done for the 9 months, barring if we deduct the buyback amount, and going forward for the fourth quarter also you are giving a very bullish outlook. So what kind of dividend payout can we look? And sir, in the recent auction, I think so there was some lukewarm response out of the number of rakes offered and the bids which were there. So what could be the reason for that, sir? And my last point will be on the demerger of the steel plant, sir. Are you facing any more headwinds? What is the update on the same, sir?
Sure, I'll take the last question first. The demerger process is on target, and we intend to finish it in another 5 to 6 months period. So that is there. So there is no issue on that count. As far as auctions goes, we have sold all the material which have been there. So there is no question of any lukewarm response. Whatever we intended to sell, we have sold. So there is no issue on that count also. And there was another question. Utilization of you're talking of cash. Yeah, we have a capex in place, and apart from that, dividends obviously we'll take a call in our board as and when it comes.
What is the capex plan, sir? If you could elaborate for coming 3 years capex, sir, if you can articulate, then we can have a better understanding.
See, currently this year we almost are doing 1900 crores. So next year also we intend to spend around 2.5 or 3,000 crores. So these are the numbers which you are talking about.
And your split up on the same, sir? Where are you putting this money, sir?
So primarily most of the cash is going into the steel plant. Obviously, but there are spring plants in Donimalai, in Kirandul also, and plus our slurry pipeline project, the pellet plant project in Jagdalpur. So all this is going to, we're going to spend on this capex.
Sir, very small point, sir. Yes, a very small point to make, sir. In our investor presentation, if we could also give a slide giving the capex and what amount is attributable to which projects and what percentage the project is completion, that would give us a better idea of the commissioning and the completion timeline of the projects and the amount spent. So that would give us better understanding, sir. This is a very small suggestion. And sir, now, sir, we also find that many of your customers are participating in the small mines which are auctioned. If we take the southern India, so your dependence on your customer profile, sir. If you could give an idea of the dominance of your clientele. A single customer is entitled to what percentage of the sales on the higher side? If you could give that detail, sir.
See, if I correctly understand this question, so it's like this, that obviously in Karnataka there is a dependency on customers, but then what happens is that most of the capacities are expanding. People are expanding their capacities. Downfield expansions are going on, and we believe that there should not be an issue in terms of customers. And then we have our Nagana steel plant also coming up, which will also consume a substantial portion of the ore which is there. So as far as customers goes, I do believe that we have already worked it out, and there should not be any issues in selling our ore.
Sir, on the steel plant, you have already clarified that there will be a separate block that will be offered for running, and on the it will be allocated separately. So, you are now telling that ore will go to that part also. I could not understand that. You have explained that for the steel plant, a dedicated ore will be allocated.
No. Sorry if there is any misunderstanding on that count. The steel plant, the ore which is going to be supplied to the steel plant is at arm's length distance, and will be supplied from our existing mines.
Okay. There will be no separate arrangement for the same for them.
No.
Right.
No separate.
So lastly, sir, on the...
Sir, I'm sorry to interrupt, Mr. Kapoor. Please come back in the question queue.
Yeah, I am there. Thank you.
Thank you, sir. We have next question from the line of Mohit Bansal from Bonanza PMS. Please go ahead.
Yeah, sir, thank you for taking my question. Sir, my first question is that your lease was pending, Doniamale lease was pending in 2018, and then after that, in 2020, you got the approval from Chhattisgarh government. So, and in the meanwhile, we have heard that Chhattisgarh government has sent some letters also that they should also be given the same amount of premium which you are going to pay to Doniamale mine. So, can you clarify that if it is applicable, then whether it is applicable to Chhattisgarh also, or it will be applicable for Doniamale right now only?
So what happens is that the government will come out with some sort of directions in this regard, and it will be applied to all mines in this country, whether immaterial of minerals or stakes. So it will apply to everybody. So it is not that it is something specific to a particular state and a mineral. Whatever rules will be announced by the government, Central Ministry of Mines. So they will apply to all states, all companies, government companies, PSUs.
Yeah, sir, that is okay. That will be applied. But since you have already got the, approval for the lease and you have started mining as usual in Chhattisgarh. So my question is that your mine, you have already got the, your lease renewal. So when the government, in the parliament, they pass this law, so whether this will be applicable retrospectively or prospectively?
No, I cannot really try to foresee what they will do. So whatever policies or rules they come out with, will abide by those rules.
Yeah. Because, sir, see, in Doniamale you are paying, then other state government can ask that we have given approval after that only. Like in 2018, Doniamale was due and 2020, Chhattisgarh was due. So they may ask that since we have given the approval after that, so we should also, eligible to get that premium, whatever you are paying to Doniamale.
See, like I said, that it will all have to be, we'll have to depend on the sort of policy or the government directions. So I cannot really comment on what sort of whether it's got to be prospective or retrospective. So
understood, sir. Understood. Okay. Second question is, sir, what right now the prevailing price? What is the discount export with Swiss? Export prices?
So there's no discount on export prices.
No. The export price right now prevailing around, I think, 160, 170. And in India, I think you are, that discount I'm asking, what is the...
Okay. So there must be, I would feel that there would be a discount of almost around 30%, 30-35%.
Sir, why you are giving such large discount? Since I understand that all the companies, they are earning good in, in selling steel. So why there is so much, it should be around 5-10%, not more than that. What is the reason giving 30% discount?
So it's like this. See, the international prices are different. I mean, we don't really. Obviously, that is factored in when we do our pricing. But otherwise, the domestic market is separate. Our customers are separate. Profiles are separate. So it's different from the and they follow there is a particular market trend which is there. Odisha is there. Odisha is a major player. In Karnataka, we have a different market scenario. So to that extent, it is not that NMDC is giving a discount to international prices. So we follow domestic trends primarily.
Okay, sir. Understood, sir. Understood. Thank you very much, sir. Thanks for taking it.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir.
Good evening.
Congratulations on good set of numbers. Sir, I want to understand if I look at the royalty rates, this of the domestic realization, this quarter seems to be a pretty low, somewhere around 15%. So any specific reasons for that?
I couldn't get your question.
So, sir, if I look at the royalty per ton basis, it's roughly around 670, while your domestic realization was somewhere around 4407. So it comes around 15%. Usually, long-term trend was somewhere around 18 to 20%. So just wanted to understand why it was lower this time.
Dave, would you like to take this call?
Actually, there was a IBM adjustment that was there. We had paid some advance last year. That was adjusted this year. And price variation was from 512 to 491 tons. This is the case, no? Yes. So it came down from Q3 in 470. This year it was 471 crores. Last year it was, I think, 439 crores. So there was a variance of 32 crores, that is 7%. So that was essentially because of, I understand, because of IBM. IBM time lag, I think, in publishing rates this time.
Okay, sir. So everything is adjusted, or some part may come in the next quarter as well?
What is exactly your question? Can you please repeat that?
So just wanted to understand, since next quarter our average realization might be 1,200 higher, so would the royalty rate would come back to the 20%, or we have some provision left which would keep it on lower side? Just wanted to understand that.
Current prices का जो impact है वो Q4 में दिखेगा, because that is with a 3-month lag. So that is why you will not be able to get that to correct 20%. Sometimes it will be 21, 22%. For example, we have taken our 600 rupees price cut, right, in Q4. But the IBM prices have 3-month lag. So they will be of a 3-month average of basically Q3. So when you see the Q4 results, quarter results, it will be higher than 20%. 20 or 20 something like that. So when you divide that, you will not get 20%.
Understood, sir. Sir, my second question pertains to Donimalai lease renewal. So in case if we get this renewal, so upon signing, do we have to give us some lump sum upfront payment also, or it would not be the case?
No, we need to, on signing the lease agreement, you need to make a payment. So that will do.
Okay. And so just one last question. We have this expected credit loss amount which we are filing up with the Karnataka government. Just wanted to understand the total amount as of now, and any dates for the court hearing?
No, we have, the court wants to do a physical hearing. So I think as and when the Supreme Court starts, they will do it at the earliest. But they want a physical hearing.
Now we don't have the dates for the hearing.
No, not yet.
And the total amount?
I'm sorry to interrupt. Would you like to come back in the question queue?
The total amount is around 2,300 crores right now.
Thank you, sir. Thank you for answering my question.
Thank you, sir. We have next question from the line of Jayant Rao, an investor. Please go ahead.
Hello.
Please go ahead, sir.
Yeah. Sir, I have two questions. One related to the volume. I just want to know, what is our capacity and how much is our generation out of our capacity. And the second thing is on our corporate social responsibility. As we are a mining company, we are destroying our valuable land, valuable mountains for our purpose, like construction of any buildings, any iron related or copper related, anything. So are we doing something exploring on this, any research, are we doing any research on this, so that our our consumption should be in a healthy way, in such a way that we have to minimize our destruction of our Mother Earth on this. Yes, sir.
So as far as CSR goes, NMDC is in fact we are one of the leaders in this field, and we do a lot of CSR work in and around our mining projects. So in fact we spend more than the required amount of 2% as laid down by the guideline. So to that extent, there is absolutely, we believe that we need to take our stakeholders take them into our. So that way there is NMDC we are actually taken as a benchmark. To that extent, we spent almost more than 3% of our profits in CSR work. So there is to that extent we are doing our bit for the people affected in and around our mines. And what was the other question which you wanted to? Hello.
Sir, I'm sorry, we lost the line. Let me check. Mr. Rao, please go ahead.
Yeah. My question is on the volume, sir. Like how much is our capacity and how much we have achieved, like maximum capacity we have achieved out of our full capacity.
So our EC capacity, environment clearance, is around 51.8 if you look at the entire NMDC. So currently, currently we are doing this year we should do around 35, and then go up to 40 for the next year.
Okay, sir. Yeah.
I'm sorry to interrupt. Please come back in the question queue, Mr. Rao.
Yeah.
Thank you. We have next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So, how much have you, spent cumulatively on the Nagarnar plant so far?
So we spent around 17,000 crores. We have almost spent.
Okay, sir. And as the total amount was, I think, about 23,000 crores. So probably 5,000-6,000 crores is still left.
Yes.
Okay. So yeah, just on the second question, sir, we normally have, this agreement for exports that we, channelize through NMDC to Japan and South Korea. So at current prices, are the exports, in terms of contribution, would the contribution be higher than domestic sales? Or because of the export duty and railway freight, etc., domestic sales are still more, profitable compared to export sales?
So currently, if you look at the current prices, the export realizations are better than domestic.
No, contribution basis, not just realization, I'm talking about just on a profitability basis as well.
Yes. Our realizations, our profits are better.
Sure. Okay, thank you. I'll get back.
Thank you, sir. We have next question from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. So, a quick broader question that I would like to understand from you all. That given the higher premium at which several of the industry players have bid for these mines, and now that even if we look at NMDC, the kind of premiums and royalty that we will be paying is significantly higher than what has been in the past. So, do we see or expect, the whole pricing scenario changing going forward in the domestic market? And like we have been seeing that there has been a difference between the international prices and domestic prices. So, do we see that gap also narrowing down, going forward, or do you also anticipate a scenario wherein domestic prices might, be at a premium compared to export prices? So, any broader thought process that you have around this premium and how this whole pricing can change?
So obviously, once this premium thing kicks in, there's going to be some sort of an impact. But then going forward, we believe that we would be able to enhance our production and work on our costs, reduce our costs. So we believe that things at the end there should not be any major impact, but some impact would definitely be there.
Right, understood. So, but my point of understanding was that I'm trying to ask you that do we see in terms of the difference between the export prices, I mean the international prices of iron ore versus the domestic prices, there's usually a gap, right? Because of now the premiums that have come into the Indian market, do we see this gap also narrowing down? Do we feel that there can be a scenario wherein domestic prices will be at par with the international prices, or they may also go up and above the international price and start trading at a premium as well? So because of these premiums and higher royalties, do we see a change in the pricing scenario overall of iron ore?
These are two separate things. In fact, the international prices and domestic prices, how the domestic prices are impacted by premiums, and whether the gap can be narrowed down. If you look at the international prices, there's a huge amount of volatility which keeps on happening, fluctuations in prices. So today they are at, if they are at a particular level, tomorrow, because spot prices are constantly changing, and changing because of the international scenario, whether it's China or buying or somebody else. So, but however, if you look at the domestic prices, they are more or less stable. But like I said, I mean, if premiums do happen, then they impact prices.
Understood, sir. That's really helpful. So secondly, you did touch upon in your opening remarks, or I think in the earlier questions, regarding the steep correction that we saw in pellets and pellets, sponge iron in secondary markets. So going forward, what is the sense that you are getting from the market? Are we seeing prices getting stabilized here, or do we still see some pressure? Because I think even in the international markets, the prices are correcting. So are we seeing some more pressure coming in for the coming quarters, or do we see that this might stabilize? And also, if you could just talk a bit about in terms of the raw material, and I think coking coal prices are on a higher run. So do we see any further margin compression in terms of higher raw material prices? So if you could just comment on both these points.
So if you look at the coking coal prices, obviously there has been an increase. I mean, they are on an increasing trend. They had touched almost $100, but then subsequently prices have been increasing, for whatever reasons, whether it's a Chinese factor or buying or non-buying. So there has been an increase in prices. If you look at iron ore has been on the reverse trend. They have been dropping, prices have been dropping to that extent. So raw material prices are fluctuating. There's a huge amount of volatility in prices which is happening. To that extent, if you look at, however, the domestic scenario, there has been a very steep increase in steel prices, which has now corrected considerably. Specifically, the long product segment and sponge, and then consequently affected by the sponge iron and the pellet prices. They have also corrected. However, I feel that the prices have stabilized to an extent, and should be, and they don't expect much downside to it at the moment.
Understood, sir. That's it from my side. I'll get back in the queue. Thank you.
Thank you. We have next question from the line of Nishtha Mukherjee from Steel Mint. Please go ahead.
Yeah, thank you for taking up my question. So my question was that have you seen any change in the buying pattern or the iron ore sourcing pattern from NMDC Chhattisgarh mines?
So obviously, due to the COVID, what has happened was the steel production was very severely affected, and it subsequently picked up. And then, if you look at the prices, which had also gone up very steeply, so most of the producers have ramped up their production. And in fact, the capacity utilizations have substantially improved, almost 75-80%. Most of the steel producers have ramped up to the capacity to almost 75-80%. So to that extent, we definitely have seen an increase in offtake from our mines. That is how we have improved our production also, to ramped up our production to meet the demand also. There was a shortfall in production from Odisha, which also added to probably the demand pull. And yes, we hope. Apart from this, we also see a good, because of the government spending in terms of infrastructure, we see a good demand for steel and consequently for iron ore.
Okay. And sir, is there any increased procurement from specifically other states, like say for example Gujarat-based units or something like that, which was not seen earlier in the previous months?
So what has happened is most of these, yes, we have seen an increased pull from the states in the western, from the west. What has happened is that most of these units were procuring they were scrap based. But now I think with the increase in prices of scrap also, they have started also using iron ore, probably pellets and sponge iron also. And we believe that they will continue to also add iron ore and not entirely depend on scrap.
All right. Thank you so much, sir.
Thank you. We have next question from the line of Ashish Kejriwal from DAM Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have three questions. One, if you can give me an update on your steel plant commissioning and when can we expect commercial production, and status on the Kumaraswamy mine expansion.
So the steel plant, we have targeted a commissioning in the month of July. So and we are sticking to that target, and we hope to commission the plant by July, August. That's what we feel we're going to, and we hope to do it. And Kumaraswamy in Donimalai sector, we have two mines, Donimalai and Kumaraswamy. Kumaraswamy is already running, is operating mine, and Donimalai we have reached an agreement, and hopefully we should be able to start very soon.
Okay, my question was in Kumaraswamy from 7 to 10 million ton we had a plan. We got the EC approval last year, and we were expecting it. The government will quickly shift it to 10 million ton, but we haven't heard anything on that. So I was talking on that. And so on steel plant also, I was asking about the commercial production. When can we expect? Or when can we expect the first shipment of HRC part?
So we start as far as the steel plant goes, we commission the plant by, when I mean commissioning, we mean the rollout of our HR coil. So so we start with trial production, and then slowly we ramp up capacities and then get into commercial production. As far as Kumaraswamy goes, we are yet to get the 10 million ton clearance, and that will happen in this by the end of this financial year. We should be getting this 10 million ton clearance.
Okay. And so secondly, in case of Donimalai mine, because that mine was closed for last 2.5 years around. So how do you want to start it? Means, is it through enduro route, or because most of the employees, they have already left, or you must have shifted to some other place? So how do we intend to start the Donimalai mine? Is it from our own sources or via MDO route?
No, like I mentioned earlier, NMDC doesn't operate through an MDO route. We have our existing manpower there. And we aim to run it through our existing setup only, with our existing infrastructure. And we hope that, and we expect that it will. We have been doing it in the past, and we will do it in the future also, going forward.
Okay. And so lastly, because we have already heard that Donimalai mine is going to start, and definitely Chhattisgarh government is also going for a premium. So in case if central committee does not give their response in the next 2 or 3 months, is it safe to say that there is no risk to our volume in entering in Chhattisgarh? or can we do some ad hoc arrangement in Chhattisgarh also, the way we did in Donamalai?
No, we don't see any risk in Chhattisgarh. Definitely not.
Okay. Thank you, sir, and all the best.
Thank you. We have next question from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks. Thanks for taking my question. My question is more on the volume. So, I mean, I can again as running almost a 10 million ton plus run rate for Q4. If I see the volumes, so essentially, what can be done to sort of maintain this run rate for the full year in terms of either excavation, mining, transportation, or logistics? Sort of, can it be accelerated in terms of volume augmentation to reach a 40 million ton kind of a yearly run rate?
Yeah, yes, sir. This is what we have been working on this and in fact augmenting our infrastructure, our capacities, our equipments. So in fact we should be able to get the full benefit of the doubling of the KK line also. So we are geared up. They should absolutely, at least up to 40 million tons. There is absolutely no reason why we can't achieve those figures.
Yeah. And secondly, as far as other business opportunities are concerned, there seems to be some progress on legacy also. We are mining operations in Australia. So, can we hear anything on it, in the medium term, or is it like still some time away?
No, in the medium term, definitely we should be able to hear something. So, yes.
And has there been any progress in terms of any additional mine allocations in Orissa on the wake of slip up in mining by so many private sector players and regional miners as well?
So in Orissa, we have been talking to the state government, and hopefully we should be able to get some. They have assured us, the Ministry of Mines and the state of Orissa. So hopefully we should be able to get some good news from there.
Okay. Okay, great. That's all from my side. Thanks.
Thank you.
Thank you. We have next question from the line of Vinod Malviya from Union Mutual Fund. Please go ahead.
Yeah. Thank you for taking my question, and congratulations for the good set of numbers. So my question was on the steel plant. Just wanted to clarify, you said 21,000 is the total capacity or 23,000?
21.
21,000. Okay. So there is another 4,000 to 5,000 crore which has to be spent. And in the past conversation, you have said that this 4,000 to 5,000 crore would be funded through debt, right?
Yes.
And so just one more thing. Before the demerger, do you plan to leverage it further? So you have put you have already put a 16,000 to 17,000 crore of equity into it. Will be the equity which will go into that company, or do you plan to leverage it further and take some equity out of it?
I think DF, you can take that call.
Yes, we do have plans of leveraging it. We have already taken 534 or 37 crores through the NCD route. Negotiating with the banks for a loan, our target is to leverage it adequately. The original DPR, it should be leveraged to the extent of 40%, but I don't think we'll be able to leverage 40% till the date of transfer, but we'll substantially leverage instead of around 8,760 crores that needs leveraging. I think we should be able to leverage around 5,000 crores.
So sorry, I could not get the last point which you said.
I think we should be able to leverage it to the extent of around 5,000 crores by early next financial year.
Okay, but you do intend to leverage it to 40% even after the deal?
40% might not be feasible, but around 20-25%, yes. That is the minimum leveraging that we are looking at right now.
Okay. No, that was helpful. That's all. Thank you.
Thank you, sir. We have next question from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hi. Thank you for taking my question. Sir, just missed the earlier comments. How much of incremental volume in fiscal 22 outlook is coming from Donimalai in your guidance?
So for FY22, you're...
Yes. FY22 outlook, how much of incremental volume you are building in from Donimalai mine?
So our clearance is for 7 million tons from Donimalai. So hopefully we should be able to reach that figure.
But just trying to understand, like if you do 35 in FY21 and additionally if you are able to fully leverage Donimalai, you should be easily crossing 42. Is there any other thing which will scale down on production?
No, there's nothing which is scaling down. Obviously, since we are going to start the mines, from next month onwards, probably once the clearance has come, you take some time to put in the, and that is why the EC is 7 million tons. So reaching that will in the next financial year we probably will do somewhere less than that. So that's how that 40 million tons is coming.
Okay. So secondly, until the final law comes, understanding is that you will continue to pay 22.5% premium for Donimalai output to the state government. Is that correct, sir?
Yes, there is some amount of premium which needs to be paid.
Right, yes. Sir, how do you plan to, would you be able to pass it on in terms of higher pricing, or this will be a hit to your output on the Donimalai, so that output will carry a lower margin than the other ones?
See, the entire thing cannot be a pass-through. That definitely that is there. The entire premium part is not be, passed on.
But there will be some element which will be passed on to the customers?
Yes, probably.
Okay. Sir, lastly, on the pricing outlook, you talked about stable outlook. Have you seen the end product pricing stabilizing in the market with respect to sponge or pellets and other things, which had started falling in the month of late Jan and early Feb?
Yes, there has been considerable fall in prices, but especially in the sponge iron and in the pellet segment, and steel prices, billet and finished product. So I do believe that obviously the flat product has not taken much of a hit. The main impact has been seen only in the long product segment. So we do believe that prices have stabilized to an extent now. Yes.
Okay. Thank you, sir.
Thank you. We have next question from the line of Ashish Shah from Tara Capital. Please go ahead.
Hello.
Yes, sir. Please go ahead.
So just wanted to understand what is the difference of realization for export and domestic in the current environment post the reduction of the 600-700 rupees?
The exports are definitely more than the domestic, and post this correction also should be exports should be definitely better.
If you can just quantify how much better by 500, 1,000 rupees, how much?
You have the numbers here. It should be around 1,000 rupees. Yes, 800-900 rupees.
Sir, and my second question is, sir. Hello.
Go ahead.
Yeah. Sir, my second question is just trying to understand what drives our decision to sell domestically or export. As a rational business, we would want to maximize our revenue. So in such environment, would we not try to increase our export and reduce the sales in the domestic market, or is there constraint with respect to transportation or anything which prevents us from increasing the export when the export realizations are better?
The first thing I'll just to your previous question, the fines realizations are much lower. So after this domestic correction, probably should be almost the same as the domestic realization. However, in lump, the realizations are much more than the domestic. It should be around 800-900. So now coming to the next question is that we have an LTA agreement with basically China, with Japan and South Korea. So this long-term agreement is a decision of the Government of India. Cabinet, it's a cabinet decision, and NMDC per se doesn't go into exports. It's only based on the government-to-government decision. So that is how, and it's a fixed figure, 2.5 to 3 million tons. So that is what we export. And basically, the iron ore, what we focus on is the domestic sector.
And sorry for my ignorance, but sir, can we not sell outside the FTA of China, Korea? Can we sell to Europe, or that also we are restricted?
Can I add something?
Okay.
Can I add?
Yeah, please.
Export surplus that CMD sir was talking about is essentially at 10% export duty. Right? Whatever surplus that we had on 9 months at 927 or lumps at 1800 rupees, surplus was at export duty of 10%. The normal export duty of 30%. Now, if we are to apply, since we sell high grade ones, if we are to apply 30% export duties, so we'll have negative realization as compared to domestic realization. So it doesn't make economic sense to sell internationally at 30% export duty.
Got it. So that 1.5 2 million ton where the duty is 10%. That is what we export, and remaining because of 30% the export parity does not work. I mean, the selling in domestic market works better.
It doesn't work. It makes our realization domestically will be higher with the 30% export duty than our international sales.
Got it. And because India is a surplus market, we would always have domestic prices trading at a discount to the international. We will never go at export parity.
Yeah, that's very,
export parity rather.
Unless export prices come at around $50-60.
Okay, got it. Thank you.
Thank you, sir. We have next question from the line of Falguni Datta from Jet Edge Securities. Please go ahead.
Yeah, good evening, sir. So I just have one question. What is the mining cap for us in Karnataka?
That's 7 in Kumaraswamy and 7 in Donimalai. However, Kumaraswamy 7 is expected to go up to 10. So then that will be 17.
Thank you. We have next question from the line of Kirtan Mehta from BOB Capital. Please go ahead. Kirtan Mehta, your line is unmuted. Please go and ask your question.
Hello, am I audible now?
You are, sir.
Thank you for the opportunity. I just had one question on the capex for reaching up to the 40 million ton. You mentioned about sort of putting up the necessary equipment and to raise the level to a sustainable level of 40 MT. So what would be the capex required? And the second question is about beyond this 40 MT, which are the growth options that NMDC can explore?
So, as far as the capex goes for the mining operations, our major capex goes for the steel plant, but then the next year's projected capex, DF, you have the numbers for the mining and mining segment?
This year, out of 1900 crores, 1400 crores is expected to go to the steel plant. The rest is for the mining, and we have a slurry pipeline coming up, which has a sanction cost of around 3,000 crores. So if you are talking about next year, we will do, as CMD said, anything between 2,500 crore to 3,000 crores, of which slurry pipeline in the mining sector, obviously the steel plant is expected to do around 1,500 crores also next year, and the rest will be on the mining sector, which slurry pipeline will be a major expenditure point. About 1,000 crores next financial year, we hope that. The rest would be on different projects that are going on in terms of screening plants that we are making, in terms of augmentation of screening plants. So there are a few projects there, around 7 or 8 of them sanctioned, which are ongoing. The rest of them on that.
Along with the pellet plant, we are also coming up with a pellet plant at Delhi.
The pellet plant is a part of the slurry pipeline project.
Yes.
Just to reconfirm, the 2,500 to 3,000 crore capex guided for next year is entirely for mining, or is it inclusive of the 1,500 crore for steel plant?
For steel plant, rest for the mining side. In the mining side, the lion's share will go to this slurry pipeline.
Right, sir. And on the second question, beyond this 40 MT, what are the potential growth options for NMDC?
We have already a roadmap in place, and we'd like to go to the entire capacity of NMDC. We'd like to go up to 100 million tons by 2030. So that would include our new mines in Chhattisgarh, Deposit 13, Deposit 4, and plus other mines we would be probably in Orissa or Jharkhand. So the idea is to go to 100 million tons by 2030.
Would there be sort of a next 3-year plan as well out of this sort of incremental capacity addition?
Yes. We have an incremental plan.
Would it be possible to share?
Yeah, so next year is 40, then we go up to, after that we go to 45. So, next 3 years probably up to 45.
Right, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you so much for the Concall, and we believe that we are in a good space at the moment, and with our expansion projects in place in our various projects, we have a definite roadmap for enhancing production in line with the government's vision of increasing steel production going up to 300 million tons. And we'd like to, being the largest miner in the country, we'd like to be a part of that process. We also are very keenly waiting to commission the steel plant in July 21, and get into other segments of also mineral segments also apart from iron ore. We also believe that with the coming online of Donimalai, our production should go up. So with the demand almost being firming up, things should look very positive for NMDC. Thank you.